Today, we did see chain store sales out earlier this morning for the month of February. And joining us with his perspective on the retail environment, we're joined by someone who specializes and invests in the sector at a hedge fund. That's Steve Kernkraut. He's portfolio manager at Durban Capital. The headline seems to be here, Steve, that numbers were better than expected. But how much do we read into what's not necessarily the most important month on the calendar?
No, February is not the most important month, but nevertheless, it's a great barometer of consumer spending because you're finished with the Christmas clearance sales, the January sales. This is all fresh merchandise, and it seems that the consumer's appetite was there to spend, which was very, very good, a very positive read.
Yeah, we saw Abercrombie Fitch, Macys, Gap sort of beat expectations. Yeah. Very discretionary names here. Interesting, Abercrombie Fitch, they're a little pricier than some of the other teen retailers. So, what is that telling us? I mean, who's doing the buying?
Well, the buying, it really seems that everyone has been focused over the last few months on the 10% unemployment rate, and that's all true, but you really have 90% of America that is employed, and that 90% that's employed is feeling a little better about their lot in life, so they're spending a little bit more. So now you're seeing the discretionary spending. You're seeing the apparel retailers, the women's apparel retailers, the teen apparel retailers, the department stores, even in Target with the discretionary spending, you're seeing those consumers spending a little bit more at the margin. Even the furniture, so the home stores, the Pier 1s, the Williams-Sonomas, those customers are coming back as well.
Is it really about relative, optimism on the consumer's part? Because we just had someone on the show, Doug Cliggett of Credit Suisse, saying that today's productivity numbers, you could look at them and say productivity is up and say that's a good thing. You could also look at it and say workers are getting squeezed that much more, that consumers actually aren't feeling all that much better. They're feeling overworked. So how is that really going to get them to go and spend what dollars they're earning?
Well, it's always marginal. I mean, consumers may not be feeling great. I don't want to proclaim that, but they feel better than they felt last year, and that's what these sales represent.
Right.
So, I mean, you could look at Abercrombie & Fitch as a case in point. Everyone is ecstatic that their sales are up 5% this year in February. Last year, they were down 30%. So again, they're still net down 25% to 2 years ago. So
what do we expect for the spring? Now, we did see a shift in where Easter falls. Any kind of movement in the calendar with holidays matters here.
Right. Yeah, no, it matters a lot. So even given that February sales are so strong and our numbers show it up 5.8%, March's sales numbers should be that much more spectacular in that you have the earlier Easter, it accelerates sales. Kohl's, for one, talked about numbers in March being up low teens and in April being down low teens. So again, it shows you the importance of the Easter shift in terms of how their sales will make up. But we think that you'll see a lot of retailers posting comp store sales in March in the teens, which will get the marketplace excited. It'll add to the exuberance of maybe the economy is recovering a bit more.
How much of the results that we just saw and the ones we're expecting have to do with just ticket price right now? Because we're past Christmas. We're past the slashing of ticket prices. So, I mean, talk to me a little bit about how ticket's factoring in.
Well, ticket is important. Where last year in the February period that we're comparing to, a lot of retailers were still 50, 60, 70% off. They had to get rid of all their excess inventory.
Where are we now?
And now retailers are at full price or 20% off.
Okay.
So the average ticket is much higher. So it could be very true that a lot of retailers are selling fewer units this year than last year, but the average price of those units are much higher.
So Walmart, we came into this segment showing you how much Walmart just boosted their dividend. They don't report monthly sales anymore. The decision on the timing is interesting here. Tell me why you think Walmart went ahead and did this.
Well, Walmart is a great company. It's a cash-rich company, but they're a defensive name, and they've lost their sales momentum compared to they led Target for the last 2 years, and that's switched in the last couple of months. And we would suspect that they didn't match Target's 2.4% comp store sales gain they had this February. So we think Walmart wants to be in the headlines, just like a lot of times when the Yankees make a headline, the Nets try to come up with some press release that'll get in the headlines as well.
So you mean chain store sales actually do matter?
Yeah, they do matter, and we wish Walmart would go back to report monthly comps.
What are you seeing there on the inflationary, deflationary front? Because Walmart is such a huge part of the market. Where they are on pricing matters to the rest of the economy.
Right. Well, Walmart is still the low price leader. But again, they have a big portion of their business is consumables and perishables, and a lot of with tomatoes, breads, all these items, the average price is down, so they've sold more units, but the dollars are hurting them. So that's been a problem. That's been a problem for them. That's one of the reasons their comp store sales have lagged, and that's the same type of thing that even Costco mentioned and BJ's mentioned when they reported their sales yesterday. Costco's saying that they sold way more televisions than last year, but the dollar volume is less because the average unit price is much less. So you have deflation.
All right. Thank you so much for all your insight. That was Steve Kernkraut of Durban Capital joining us as we look backwards and forwards at what to expect from the consumer and retail sales.